Good morning and welcome to the Hardcore Mortgage Show brought to you by Capital Mortgage Funding. I am Becky Alley and I will be your hostess with the mostest for the next hour where we are going to talk about all the things real estate. I am jacked up today. I have 3 shots of cappuccino in me, I'm pretty sure. I got my favorite other queen with me, Miss Lisa Lawson.
Thank you so much, Becky Alley. You're one of my favorites too. We are the 2 ladies in the office. And
yes.
Knocking it out. We're totally killing it. And we have a wonderful guest here.
Yeah, we got Mr. Matt Bush, no stranger to the show and no stranger to his suit. If you are checking us out on Facebook Live, his suit, he is fresh to death. As soon as I saw him get out of the car, I was like, ooh, hey, who are you?
Yeah, it's killer.
Hey, Harry wasn't here, so someone had to hold down the power suit. So I got to keep it 100, man.
Yeah, when we were talking, so it's been a while. So you're talking Matt was the last show that we had in studio before the world officially caught fire, right? And because I was going through my old shows and I was the host of that one. It was March 14th, 2020.
Yep.
And then here we are almost 18 months later and you are live and in living color and I'm loving it.
Yeah, I just hope the world doesn't return, and I hope we're not like a jinx.
No.
So let's hope everything stays
No,
the front.
listen, the high fives are the positive things, right? So we started off on a good note. We're here to be your verbal high five. We appreciate you listening. We appreciate you joining in. And all of our longtime followers, we're in the 25th season of the Hardcore Mortgage Show. So we're going to kick it off. And I want to talk about a couple of announcements that just recently came out. Conventional loan limits. They've recently increased that up to a 625. It was at a 417 for
a couple years ago.
Yeah, but it was there for a while.
A long time, yeah.
Right? So now when they've announced that the minimum loan amount for conventional or the maximum loan amount is 625, right? So what does that mean? That means that we have been in such an appreciating market over the last several years that now they that's just where it's going, right?
Yeah, that's a really big deal. It's a lot of people who are like, hey, I need a $570,000 loan and that's jumbo. Well, now it's not, and that's a huge player. So it technically doesn't go in effect till next year, but we here at Capital Mortgage Funding, we're funding them as if they're going into effect now. We're just going to hold the paper for a minute.
Yep.
So we're kind of doing it a little bit earlier than quote unquote the official start. Hopefully giving people the benefit of being able to take advantage of this, updated rate, updated limit.
Yeah. So what does it? So when she's saying, we're going to hold the paper, so what does that mean? That means that we are a direct lender. We are our own servicer. So we have the ability to where you're going to make your payments to us. So a lot of people ask that question: are you going to sell or transfer the mortgage? And granted, that's a little bit beyond our pay grade as far as we don't get to determine what they're going to sell in the secondary market or not. But we are a direct lender, we are lending our money, and we are going to hold that paper.
Yep, exactly. So it doesn't mean that it won't get sold in the future. And we can't predict when that could be. That could be 6 months from now, 6 years from now. We have no idea when. But, at the point of closing, especially on these larger ones that we're going to fund prior to that official start date, it will be with us for, until then at least.
Right. So I get that $625,000, that is a big price point, right? And not everyone is going to be in that price point. But the reason why I'm bringing that up is because if you've bought your house, let's just say with someone as great as Matt Bush over the last 2 years, you are in this appreciating market where you can now, it's back to that, you could buy that 5-year home and turn around and sell it and make a profit.
Another thing you guys could do is refi, right?
Yeah.
We can do refis now. So we've got a bigger loan limit. So if our house is appreciated this whole time, now, we saw Harry on Instagram this past week. Rates aren't going down. In fact, the opposite is going to be true. So this might be the last train stop to refi at the higher rate without the jumbo loan status and get what you want maybe out of your house to do that last project to put on that addition and really finish your house at the last possible second.
Man, are you in my mind? Because literally that's all the things that we're going to be hitting today. It's going to be the refinances. What are the rates going to do? Later in the show, I want to hear Matt's predictions on the fourth quarter that we're in right now, as well as, leading into the first. But let's just say you're not one of those $625,000 loan amount people, right? What are other programs that you can get into that are going to help you? And another big announcement that here at Capital Mortgage Funding is with FHA, we can now go down as low as a 580 FICO score.
That's a big deal.
It is a huge deal.
That's a really big deal. So before we had a 600 minimum mid FICO score, and that usually meant that some people who were 590, that we could eke up their score with some credit rescores. But that isn't always the case, and sometimes it takes more time than people have. Going down to 580 is a really big deal. That's where we originally started before the pandemic.
Right.
That's where we always were. The pandemic caused some things to tighten up, but now we're back to that. So I think that's a really good sign. I think it's a sign that people want to get back to normal, even with all these crazy variants that are happening, and that the market's responding as such. Interest rates are going up, which they should in a strong market. We've also got, obviously, we were just talking about the lower credit scores. We've got new programs coming out. All of these are big positive things.
Yeah, we're going to get into all that stuff. And as far as the 580 FICO scores, right? So that's going to open up the doors because a lot of people think that you have to have perfect scores. You have to have, like
20% down.
20% down. You got to have that mattress money and all that stuff. And that's not the case. So, it's not about setting anyone up for, where we're going to start taking bad loans. That's not what we're saying here, but it's progressive, right? The point is that we're trying to open up doors to allow everyone to get into homes, right?
Yeah. I mean, and, to be clear, there's people who have a 580 credit score that's quote unquote good credit. And there's people who have a 580 credit score that we can't finance because of other situations that might be going on. The credit score alone is one piece of a very large puzzle, and it doesn't tell the whole picture. So you can have people who pay their bills on time, are never late, and they still don't understand. They call me, they're like, why don't I have a 720 or why don't I have a 740? Why is my score stuck? So there's so many pieces to the credit puzzle, and that's one part of it. So like you said, we don't want everyone to think, oh my gosh, well, it's a 580 and I'm good to go now. That's not how it works.
Right.
But it definitely gives you a much stronger opportunity to be approved and get into a home.
Yeah, so we're going to be taking all your calls. We want to hear from you. 248-539-9797. What is your situation, right? So whether you're looking to purchase, refinance, buy, sell, all that starts with you making a decision to do that, right? And it starts with a conversation. So on the buying side of it, right, Matt? So like someone comes to you and they're like, hey, I decided, right? Because I feel like everyone's one decision away from a better life, right? One decision, one great person you're going to meet, one conversation. It's just one little thing is going to change your life. And part of that is we are here to help advise you on helping those decisions, right? So someone comes to you for the first time and is like, hey, Matt, I'm looking to buy my next house, my first house, my fifth house, whatever. What is that first part of the conversation that you're having with those people?
What are you looking for? Where are you looking? What's driving you? Are we in a condo? We want a house. Are we renting from somebody? We want to be first-time home buyers. There's just a huge dearth of questions about how I can best help you, your family, make that next step. So it's not just a one question. It's one conversation that, you start at that tip of that iceberg, but at the end of the day, you're going to probably know that person's whole life story and figure out, all right, how can I, like you said, best advise you? How can I advocate for you and put you in the best position to win? Oftentimes it's, hey, let's go see, I'll send you some listings. Let's see what kind of grabs you. But also, hey, have you been pre-approved? Because honestly, if we're not pre-approved and we're shopping for houses, we're not setting ourselves up for success. So that's typically when I hit Lisa Lawson enters the picture. And then, we have a secondary conversation. Hey, so-and-so, I just talked to them. They're looking for this. Let's, work as a team to kind of get this family over the hump. So it's a longer than what's one question, but it's the start of a relationship because you want to find that agent or that lender, whomever, that matches you. So, not every agent is for every buyer or seller.
Right.
But you're going to click with somebody because you're going to trust them with probably one of, if not the biggest financial decision that you've made to date or in your life. So you're going to want to make sure that you ask the right questions, ask what their availability is, ask how many transactions they do, because there's a lot of people out here with real estate licenses that don't do this full time. So if you're, trying to buy a $600,000 house, you don't want someone that's doing, delivering pizzas on a Monday.
Even if you're trying to buy a $60,000 house, you want somebody that's going to be available, working full time, available to answer your questions and understand what the market's doing now.
Absolutely.
Yeah, I mean, we're in an ever-changing market. I mean, and like, what is like Lisa's rocking this great shirt. What did your shirt say, by the way?
It says, if you guys can't see, never underestimate the power of a loan officer.
Truer words have never been spoken. I mean, we're talking like what Matt is describing is, it's not just a bullet point conversation, because every situation is the same. It's the same conversations a little bit, but it's different because your wants, your needs, your goals, what your status is, right? So our goal is to have those conversations so that way we know how to set you up for success when you are looking for that house. So when you come back, we're going to be taking still your calls, 248-539-9797. We're going to get into the rates, right? What are they doing? Where are they at? What are they going to go to? We'll be right back. Welcome back. Ooh, I like that little song intro. You're listening to the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. Capital Mortgage Funding is powered by Fairway Independent Mortgage Corporation, MLS 2289, which is also an equal housing lender, which means that we will give everyone the same opportunity to get into a loan. Hooray for that. So before the break, we were talking about conversations, right? And when you make a decision to buy, sell, refinance, where do you start, right? And it all starts with asking. A lot of people think that they can't afford a house or they can't refinance because they don't ask. They just assume, right? And you don't know what you don't know, right? That's like me going to, I don't know, like a mechanic and being like, I'm going to rebuild my engine, right? You can YouTube it all you want, but you're better suited to go to someone that is in that profession, right? And that's what we're here for. We're here to advocate, answer, not tell you what you need to hear, not tell you what you want to hear, but what you need to hear. So I want to get into as far as, obviously it's no secret. We hear about inventory, right? And it's been one of the most competitive markets that we have seen in the last 18 months. Okay. It's no secret. So, but what I'm seeing and what you're seeing, are you seeing a little bit more of a reprieve since the last 6-7 months ago, right? And to that point, is it forcing these sellers to kind of come back to reality? And like we were talking in the break, like when do you have that conversation and are they hearing you when you're saying, look, the days of you getting an extra $50,000 out of this house, is it still possible?
Yeah, so this fall has been absolutely crazy. So, whereas last year kids were still Zoom schooling, so you could be in whatever school district you want and you could Zoom in. But now kids are back in school, you've got to be in the district. So we've seen inventory almost triple in the last 2 months. So almost triple. Yeah, there's almost 2 months worth of inventory on the market right now, which for the last 6 months, there's been less than a month's worth of inventory.
Yeah, I get what you're saying. So it's like if you got one house, now you have 10. Okay.
Yeah, exactly. So honestly, for the last 18 months, and Lisa and you guys can run the tape back, I've said it's never been a better time to be a seller, especially like a first-time seller, because A, you have equity, and B, you can go find that house. Right now, it's beginning to turn. If you're considering buying your first house right now and you hear all the horror stories of your friends who just bought houses, you're not going to have that. You're not going to get in multiple bidding wars. You're not going to have to pay over appraised value. That's not happening right now. So if you are a first-time home buyer, this is the time to re-enter the market. I know I had a bunch of first-time home buyers, and Lisa, you can attest that people just put it on hold. They said, hey, this market's too crazy. We don't want to see the same house as 50 other people, put in 5 different offers and kind of get downtrodden. But honestly, right now is when sellers are getting more serious. Their prices are coming down. We're seeing more price reductions. We're seeing longer days on market. Still very serious sellers, especially to list their house at this time. But buyers now are getting the better of the deal sometimes. I'm not. I think this year I've only paid one over ask appraisal guarantee.
Wow.
So
snaps for you.
Yeah.
That's
Call
a good
Matt
deal.
Bush.
Yeah. And that's out of like 30,
539-9797.
and that's out of 25 to 30 transactions.
Yeah,
so it's
that's
not
huge.
out of a few. But yeah, we're getting houses at or under ask right now. I just submitted an offer last night, $30,000 under ask, which is about 20%. So the house is going to trade at 85 to 90% of its value. We're going to get it. We're going to renovate it, and we're going to add value to the house. And it's back in the court of the first-time home buyer who can buy a house, redo the kitchen, have instant equity in the house. And next year, by March, April, it's going to switch again like a light switch.
Yeah.
It's going to be crazy again, and we're going to be going through that stuff as long as rates are still low. But right now, until about January or February, if you are thinking about buying a house, get in.
This
Get
is the
in right now.
pocket. This is the time. Yeah.
Literally call right now.
Don't be the person who says, oh, I missed another opportunity. Like, you know what I mean? They heard the horror stories. They decide to get out and they're like, maybe I'll wait till next year. And I was like, you want to probably look now. Next year, things are going to get crazy and you have the opportunity here to get something that is a decent price for market value. You're not going to be paying, like Matt said, an insane over asking type of price. This is the time to do it. We've got this little lull here. Things have softened a bit and you have the opportunity to see more properties, right? Because there's more on the market and have a better chance of getting in without all these crazy, overages and guarantees that we were having to make, 6 months ago.
I want to put a stamp on that. So what we're talking about is that the market has opened up where you're not seeing as competitiveness. You're not forced or compelled to put so much over asking, right? So for example, I had a first time home buyer. The original purchase price was 170. So what's happening is that these homes are not also appraising for these overpriced because the appraisers, clearly the data is not there. So we have first-time home buyer that was originally buying a 170 house. Wasn't any concessions. FHA is now being approved, and the appraisal came in 10 grand under, and the sellers reduced the sales price to 160. And so what that tells us is that, the days of the sellers digging their heels in and be like, no, my house is worth XYZ. Everyone is having to come to terms with really what's happening, and buyers are starting to make out versus where they were losing 6 months ago because they had that FOMO, that panic. I got to get in this house because they lost so many, right? So they can actually get into these houses with more reasonable prices.
Yeah, for sure. I think, Matt and I would agree that the sense of panicked urgency that was happening April and May earlier this year isn't quite as intense. And I'm not saying that it isn't a competitive market. I'm not saying that you can, it's a walk-on and a home run, easy, but it's definitely much more relaxed than it was, earlier in the spring. I think even if you're not a first-time home buyer and you're trying to upgrade, downgrade, whatever your situation is, this is a much better time to try to move forward and get closed than it would have been 6 months ago.
Absolutely. Yeah. If you follow the rule of 7 days, which I don't know, if you do, Google it, rule of 7. If you want to buy something, wait 7 days, and if you still want to buy it, go and purchase it. Same thing is true with homes. If you see a house on the MLS, it's been on the market for less than 7 days, maybe pass on it. But if it's been on the market 8, 9, 10, if it's survived a weekend, it survived an open house, that seller's thinking, oh, why isn't my house selling right now? And that means, hey, let's go and see this house. Maybe it's got an ugly kitchen or some bad paint or something, but nothing that we can't fix.
Right.
So let's go see these houses that have been on the market for a week, for 2 weeks, and make that equity back. It puts buyers in that catbird seat, in that driver's seat to make a deal, as opposed to, hey, showing started on a Thursday, they're ending on a Sunday. Well, don't put yourself in that position. Go see a house on a Wednesday. Go see a house on a Tuesday after it's been on the market all weekend. It doesn't have any offers. That's the time to strike.
Yeah. So
really good advice.
Yeah. And I want to actually, so do you think that also the reason why the houses have been sitting a little bit longer is because new construction is back up, right? So we had the lumber, that was skyrocketed. But do you think that some of these buyers are got so fed up of trying to fight over the existing homes? Do you think that more people are going after the new construction so that way, hey, you know what? I have this house. I'm going to build it. I know it's going to take them 12 months, but I know I'm guaranteed this place.
My theory is a little bit different.
Yeah.
In the summertime, you've got a lot of people who are downgrading from those 2,900 square foot, 5-bedroom houses. That's when they're looking for that 3-bed to 1.5 bath ranch. Now they don't want to be involved in that. So, if you're 50, 60, you probably don't want to end up moving your family in the middle of wintertime. Even if it's just you and your wife or your spouse, you don't want to be trudging through the snow looking at houses. Whereas that first-time home buyer, they do. So people who have left the market are those down traders because they don't want to be dealing with that in the wintertime. They may be on vacation. They might be
Snowbirds.
In Florida. Yeah, exactly. They might be in Florida, or
snowbirds?
maybe they're just holding up for the winter. But so they've left the market. So the first-time home buyers aren't competing with that. Hey, I just sold my $400,000 house, and I'm going to go buy this brand new starter home for $150,000, $180,000 cash. So there's less people in the market, which is actually what's making more inventory because there aren't as many buyers out there looking for that first-time home buyer. First time home.
Yeah. I mean, I see that. I mean, I feel like there's, definitely there's a plethora of buyers out there still. But I do feel that they're getting their offers accepted more because you're right. The people that got frustrated got out, right? We have seen a surge in new construction. So for example, the reason why I asked that question is I have 2 clients where they were trying to find that existing house with the good bones, right? And they lost out on several deals. So then they got frustrated and said, you know what? Fine, I'm just going to pay extra, wait 6 months, but now I know how to gauge my life. I don't have to enter the buyer's pool and not have a home. I know I can stay in my house for the next 6 months. They're going to build this house out, but they also know that they're paying a little bit more money. There's more costs that come with new construction.
Oh, yeah, I've done it. Yeah. There's definitely. Then the things you don't think about, like you build a house with all these windows and all of a sudden everyone can see inside and you have to buy 43 sets of curtains, all these extra things afterwards.
Yeah, so after the break, we're going to get into new construction, what those additional costs are. So keep it right here, 248-539-9797. Welcome back. You're listening to the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. I am Becky Alley, joined by Mr. Matt Bush with the freaking best suit. He is fresh to death in that suit. So if you're checking us out on Facebook Live, check out that power suit. Here for it. Snaps for that. And I got my girl Lisa, who is my confidant. She is all of the things that you want in a coworker, a friend. So if you are lucky enough to speak with her, you're lucky.
Oh, thank you so much. But I was going to say, they usually call me Google. I thought you were going to bring that up.
Well, yeah, so she's going to be Google for, she's going to find a way to be Google for
Halloween. That's
for
Halloween.
So like Lisa, so she is, so she works late with me, most nights. We're called the night crew. She's there early weekends, nights. And, we often kind of bounce things, off each other because again, I should be so lucky to know every single solitary thing at the top of my head. Right. But if I don't know it, I know I can go to my girl, Lisa, and she's going to hook a girl up with the answer.
Yeah. Unfortunately, I have a memory like a trap. So although it has a lot of useless facts, it has a lot of good ones too. So I appreciate that. And I'm happy to help anybody that needs help. You know that.
Yeah.
I've always been that way. So.
And it's like in what we're talking about in the beginning of the show, it all starts with a conversation,
Yes.
right? So you don't know what you don't know. So we're here to help you, advise you, give you that guidance. Granted, you're going to be in the driver's seat, but we are going to be here to kind of help give you the best information that we have, because ultimately we don't want you to get screwed over, right? Why would you want to work with a stranger? And why would you want to work with someone that you just randomly Google on the internet when you can work with qualified professionals that you can see? We can meet with you. You can talk with us. We can text with you. Yeah. I don't understand that. I mean, I guess we're in that industry or that time, not really industry, but just that where there's so much information at the tip of everyone's fingertips, right? So everyone's just Googling and just taking any, for example, the reason why I'm going with this is I got a quote and the name of the company was I think it was Handshake Mortgages or something like that. I didn't even know what it was. And I saw the quote. I was like, the only thing I could respond with was handshake. What even is that? There's more than a handshake that goes into when you qualify for a mortgage.
Yeah. It almost sounds sketchy, right?
I know it's scary.
It's a little scary of a name. I don't know if I would have picked that. Maybe they had a different idea, but
it was something along those lines, but I was like, man, what is going on with that?
Yeah. I think the biggest thing that we've always preached here is information, right? And education. So we want our borrowers to feel educated. I know Matt wants his buyers to feel educated. So they've made the right decision for themselves, their families, that when they close, there's nothing but joy, that they're happy with every decision that was made. It doesn't mean that there aren't bumps along the road. People want homes that they don't get, their offers aren't accepted and hearts get broken and things happen. But in the end, it's all about finding the right place for you and your family. You know what I mean? Or putting you in the right loan if you're refinancing to save you money or whatever the situation is for your long-term financial goals. And that's what we're about.
Right. And speaking of refinancing, so right now we are still in a point where refinancing 90% of the time will make sense for somebody because the rates are still so low. But the reality is, and Matt touched on in the beginning, is the rates are not going the opposite direction. We are not going to see them going lower. There's talk, you got inflation. You have the Fed that's going to have to start tapering off these rates. So what does that mean? I mean, there's talks where we could be seeing rates up to 4% at the end of 2022, right? So if it makes sense,
in the fours, it might even be higher than that. We don't know.
Right. Yeah. And so if it makes sense now, you start with that conversation. And that's where, does it make sense for everyone to go from a 30 to a 15?
Yeah. No, it doesn't. It obviously depends on how much money they're making, whether debts that they have. I have someone called the other day. They really wanted to do a 15. They had a specific amount of debt that we had to deal with. And a specific amount of income that they made. And the reality is their debt to income ratio was a little too high to do a 15, but we could do a 20. And that's what we ended up doing. I mean, still saving them a significant time off the term of their mortgage, still dropping their rate. Their payment actually went down about, I think it was just under $20. So they were still saving a little bit of money, but we just didn't have enough room for that 15. So that can be a big jump between the 15 and the 20 years. So there's always other alternatives. Just because you can't do a 15 doesn't mean that you still can't meet the goals of a shorter term and a lower payment. It just might mean that you'd be looking at a 20-year or possibly even a 25-year, just depending on the situation.
Yeah, so we get a lot of phone calls. One of the first things that if someone's calling us, so, they're calling Matt for buying, if they're calling us, let's just say for a refinance, because it does make sense, right? So if it does make sense for you, it starts with that conversation and you need to lock in the rate because you're going to be stuck being a looky-loo, right? But one of the other things is what's your rate, what's your APR, right? And what people don't understand is that an APR is arbitrary, right? It's just a moving number that's going to change based off of particular closing costs. So just because someone's APR is X that doesn't mean that their closing costs are going to be less. Because, for example, if a company is charging an application fee, that is not something that's counted in the APR. And most people do not know that. So that means that their closing costs could be $500 more, but the APR is going to be the same as someone that doesn't have an application fee. So these are things that you need to know that most people do not know, and we're here to kind of help with that. It still makes sense for cash out refinances, because when the rates go up, we're going to start losing a little bit of buyers. They're going to lose their buying power. But we're not advocates of using your home for a piggy bank, right? But if someone has toxic debt, can they use the equity in their home at these lower rates? And in those cases, will it make sense?
Absolutely. I mean, there's people who are so overburdened with that, you know what I mean? But they make great money, and they just get themselves in this pitfall. They've actually met with a bankruptcy attorney. Sometimes bankruptcy attorneys say you make too much money. You're on the brink, but we can't get this done, but they just feel like they're drowning. These are the people that I love to assist, because often we can consolidate all that debt, use equity that they have in their house. It's not ideal. Like you said, we don't use it as a piggy bank, but I mean, it gives them breathing room. We can save them, hundreds, or if not, I've saved $1,200 a month for somebody before, in cash flow. Now they're breathing. You know what I mean? And it doesn't mean that you have to go back to a 30-year. What I often try to do with these, and I always pitch it to them, if you've been in the home for 5 years, let's look at a 25-year. You're not starting over. You're still at 5 years of paying into it, or if you've been in it 10 years, let's look at a 20-year and still do the same thing. So it's not like, oh my gosh, I got to start all over and I've got 30 years to pay this off again. That way you're still gaining equity faster than you would have had you start over. There's a million ways to look at it. Mm-hmm. And I know I get teased because people will call and they'll be like, hey, I want to run this scenario by you. And I'm like, great, let's do it this other 3 ways too for you. So you can see all 4 of these options. You know what I mean? Because even though you're thinking this might be a better option. Sometimes it is, sometimes it isn't. But I want to make sure people are educated and understand everything that's available to them. And I know Matt does the same when you're showing houses for people. You're like, look, this is what you thought you wanted, right? But let's go look at these couple things. And sometimes I hate to say people don't know what they want until they see it. You know what I mean? Like, I didn't know I needed heated seats in my car. It was like a mandatory thing in my life until I got a car with heated seats and a heated steering wheel, and now I can't live without it. But if you would have asked me 5 years ago, I would have been like, who cares?
Right. No, that's
but
so
now
true.
it's a requirement.
Yeah,
you know
I can't live without it.
So sometimes you don't know what you want until you see it. And I'm sure you run into that with people in houses all the time.
Yeah, and sometimes it's all budget based too.
Yeah.
Like at 200, you'll get this in a house. At 175, this is going to be the house. So if you want to keep your budget at 170 or below, then you're going to have to just give up those items.
Right.
So it's, do you want to put in the sweat equity and do it yourself? Do you want to just turn the key and move in? Like how handy are you? Is mom or is dad or...
Are you a Bob the Builder?
Exactly. Like, what are we exploring, Dora? Like, What do we want to do?
And where's your payment? Like, a lot of this has to do with monthly payments too. Like, there's people, and I know we all have, like Becky and I have them, and everybody does in this industry. You send them a pre-approval and they're like, whoa, that's way more than I really want to spend, right? Because it's outside of what they believe their comfort zone is. But we always do it. I'm like, here's your max approval. You don't have to spend that much, but at least we know where you're kind of topped out at. And often they say, this is my number. I really want to stay able to use it, the 175, right? But then they go out there and like, I can't find anything for 175. So then I'm like, well, I'm going to work up an example estimate at 200 so you can see what this impacts your payment. And they're like, oh, that's it? They don't realize that it's not such a significant increase in payment. And they're like, and they don't want to try to scrape up the funds or have to rely on friends or mom or dad or anybody else to get these things done, like we said, to do sweat equity. And they're willing to spend the more money, when they realize that the payment is really what?
Yeah, I mean, you're talking like, so for example, with the rates being as low as they are right now, for every 1,000, it's affecting your payment by $4 to $5.
Yeah.
Okay, so if you're throwing an extra $5,000 on a purchase price, that's $20. Okay, right. I mean, you can handle that. Like, talk about drive-through, it doesn't even, cost that much, right? I mean, it's probably more than that depending on what you're getting. But, to that point, it's all about that conversation and, and just knowing where your comfort zone is. And with Lisa talking about the multiple examples, we're not trying to overwhelm you with information, but at the same time, we need to make sure that you're seeing it the full spectrum from top to bottom, right? And another thing is home improvement, right? So a lot of people are doing cash out refinances to improve their home. And we get into a lot of, can you over improve your house? Let's just say someone's going to sell their house, Matt, right? And they're reaching out to you. I'm thinking about selling. I might sell in the next 5 years, but I'm also thinking about redoing my kitchen. Like, are there times where, yes, that makes sense? Or you'd be like, no, if you think you're going to sell it, what do you tell those people?
Yeah, usually if you're going to take on a big project like that, you're going to want to stay the next 3 to 5 years. Like anytime you do anything major, I always feel like it's Murphy's Law. If you do a new kitchen and you do black countertops, the people that come to your house want white countertops. Like, you can never do it the right way. And I just had a listing appointment, I think it was Wednesday, like, hey, what do we need to do to make our house sellable? And it was like, your house is pretty much spotless. Let's, put some light covers on. Let's do some trim around the doors, but let's not like redo the basement. Let's not rip off all the drywall, paint, and then put the drywall back on. What do we need? Okay, we've got a kitchen, which typically sells the house probably 50% of the time. This house is a beautiful bungalow in Ferndale with a master suite on the top that is to die for.
Nice.
And there's nothing like that at that price point. So between those factors, like, let's just make sure that when Dad walks through with that first time home buying couple, he's not picking the house apart. He's not saying, oh, but what about this? You know what, Dad?
I call it the cousins, brothers, sisters, grandmas, dogs coming to give their opinion of the house and rolling the marble on the floor, right?
Like Dad, who took an inspecting course in 1996, and now
and their
he
mother
knows
was a
everything
bank teller
about
and they know
asbestos,
all the
right?
things that are finance.
Yeah.
Yeah.
All
So
right. We're coming up to a break right now. When we come back, we're going to get Matt's fourth quarter predictions, early 2022. We're also going to get a little bit more on the what's going on in the market and can you over improve that house. So keep it right here, 248-539-9797. We'll be right back. Welcome back. You're listening to the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. It is Saturday. What is it? The 23rd?
Okay.
24th? Whatever day.
Sure.
What day is it?
It's the 23rd till midnight.
Yay,
Woo!
the 23rd. I can't believe this year literally has flown by. I cannot believe that I'm getting married in like 2 months.
Literally,
I
yeah.
know, it's crazy. You're talking about something that happened like, 2 years ago, and here we are. Like, it's just like literally this year. But I feel like it's almost like a rite of passage. Like,
Yeah.
as you get older, like literally time flies by so much faster.
It does, absolutely.
And in this
It's like a
industry,
blink.
and we're always thinking ahead, right? So if someone's doing a refinance, you're closing in November, you don't have a payment until January, right?
Right.
So that's another, it's not a selling point, but if you're to do a refinance right now, that's 2 months, a little break during Christmas.
Yeah.
But we're always thinking so far ahead. I feel like that adds to the
The speeding.
back to the, like Doc and Marty going back to wherever we're going to, Back to the Future.
I love Back to the Future.
I know, it's such a good movie. Speaking of the future, we do not have a crystal ball, but
No.
we are here to help you in any way, shape, or form as far as how to anticipate what we think is going to be happening in 2022. The experts, they've kind of put out their data, so we're going to get into Matt's predictions here in a little bit. But before that, I do want to kind of touch on some advice that we can give to buyers, right? Someone that's coming to the market. What are some things that someone can do right now? So let's just say it's always been a goal of theirs. Maybe they're intimidated by it, right? They've rented for so long and they just don't know. So what are some things, Matt, that someone can do right now to start that process?
Call Lisa Lawson at Capital Mortgage
Yeah,
Funding.
good answer.
But shortly thereafter, you got to hire a professional, regardless of what you do. Lenders, real estate agents. I mean, you wouldn't go to a doctor who does it part-time or a dentist who does it part-time. So you don't want to hire a real estate agent that does it part-time.
Mm-hmm.
You want someone that's going to dedicate all of their efforts to you. So ask, hey, how long have you been in the business? How many transactions do you do? Ask the important questions because your future depends on their success. Being pro, like my job isn't just to show you houses. It's to network with these agents whom we're writing offers to so they know that we're the best buyers if there are multiple. So it's a huge thing. Have that critical conversation with your lender. Hey, this is what I pay in rent right now. This is where I want my mortgage to be. Because if you spend $1,000 a month on rent right now and you go to $1,500 a month in your mortgage costs, that's going to completely blow your break-even point. That's going to completely change your standard of living. So honestly, probably if you're spending $1,000 to $1,200 a month in rent, let's buy at like $800 to $900 to $1,000. Let's save $200 a month because being a homeowner, you can't just call a landlord and say, "Hey, there's something wrong. Come fix the sink. Come fix this." That's all your responsibility now. So save that money. Find out where your number is and stick to it. And honestly, I tell all my buyers, I can take you to 90% of that house. So whatever your dream house is, I can get you 90% of the way there. You've got to imagine that last 10%, that new kitchen, that other coat of paint, that maybe grandma smoked in this house, so let's rip out the carpet and put in some ozone. Like I can't manifest a house. I'm not Genie. I can't twinkle my nose and make everything perfect. But with a little bit of sweat equity, a couple weekends worth of work, maybe you got some good friends, you can bribe them in, beer, wine, and whatever the situation is. We can get that house back to that 100%. It's just going to take maybe a little bit of work.
Yeah, I like that. I mean, so like, don't be married to your spouse, not your house, right? So like, it's almost like practice. So if you're paying someone else's rent right now, you've been practicing on what it's going to be like to buy your own home, right? But you have to worry about those other expenses, right? Furnaces, roofs, whatever is going to come up life, right? There might be a sickness, God forbid. So, and obviously we all have experienced that in this world right now. So, but yeah, like if you are currently renting, you're practicing already. You're practicing and taking those steps. So now it's just a matter of finding that price point where you can live conservatively, still do all the things that you want to do. And that starts with a conversation, right? So Lisa, what are some things, what's your take on that?
I always say conversation is the most important. And I've had people call me and say, I think I'm ready to get started. And I have, some initial questions and I realize that they're not going to be ready. Like maybe they just filed bankruptcy too recently and it's going to be a while, There's a point where it makes sense to pull a credit report and get started, and there's a point that there isn't. But we're going to be upfront and honest with you. For the most part, if you think this is something that you want in your near future, I tell people, call a loan officer. We have to get you started. You don't know what you can do. There's people who think they can do more than they can, right? They think that they can buy a $200,000 house, but really they're capped at $140,000, because of other debts. They don't realize that they co-signed for somebody else's loan. However, we can't prove that the other person is paying it out of their own bank account and it wasn't really a joint, or they bought something for somebody else. They paid for a car because a person couldn't get a car on their own. And they're like, well, can't you wash me out of that payment? No, because the other person's not on the lien. There's so many other these little nuances that people don't think about, right? That it's so important to get the phone, give us a call. Let's get started. Let's pull a credit report. Let's see what we're working with. And if you're not quite ready now, that's okay, because we're going to help you get ready. You don't have to have perfect credit. Clients all the time say, I'm not ready. I can't have you pull my credit yet. I haven't finished everything. That's exactly when you want us to do it. Because if you have a finite amount of money, say you've got $2,000 to work with to pay off bills, you can pay off the wrong bills and it will have no impact on your score. People have no idea how credit works. And I would much rather you take the money you have to work with and have the greatest impact to improve your score. And only a loan officer who has the tools like a credit analyzer and what if simulators and things like that are going to be able to do that for you.
I tell everybody, I sat down with Lisa in January. I didn't buy my house till July.
Yeah, true story.
So we literally built a plan of attack on pay these bills, do these things, and then by Memorial Day, you'll be ready, and then we can get you something in the summer. And that's exactly what happened.
Absolutely.
Like, that's just the way it works, is you don't know what you don't know.
Right.
You don't know how to get there.
Right.
We're tour guides. You're one side of the coin, on the other. So, let's go on a safari together. Let's go on a safari together. I'll point out the wild animals.
But not
you take the photos.
Not the Two-Face and Batman.
Right,
like one side's it's two good sides.
No, two good sides.
Yeah.
But it's a good analogy, though.
It is.
That we all work together as a team, right? Your loan officer should be working with the real estate agent as a team. Like Matt and I work together for a long time. I know you've got relationships with agents, Becky, all the time, and you want us to work together for the common goal. And sometimes it's about communication, letting everybody know. I had some agent call me the other day, hey, I'm just checking on so-and-so's pre-approval. And I was like, okay. I said, well, I talked to them the first time yesterday, and we're looking at, it's going to be a couple months. It's just, it is what it is. They're not quite ready, because you don't want an agent wasting their time showing you houses you aren't in the position to put an offer on because your credit might have the situation, or maybe you have no money saved yet, or whatever your situation is. You're going to fall in love with something that you can't have. Why torture yourself? But we'll put the game plan in, and then there's going to be a point. It doesn't usually take that long, month, 2, 3 months, 4 months, whatever. You're going to be ready to go, and you're going to be in the best position possible.
I call it the hungry eyes, right?
Yeah.
So you're seeing something that you want, but you can't quite afford it, but you don't know you can't afford it because you haven't had that conversation, right? So let us pull the credit, have that conversation, and not all lenders are the same. For example, I spoke to someone yesterday. Someone told them they had to pay $10,000 worth of debt in order to get their score up to XYZ, and I was like, that sounds crazy. I looked at it, and literally it's $400.
Yeah.
$400 deduction on one credit card. So not everyone is the same. So sometimes it does make sense to speak to more than one person to kind of make sure that you are going in the right direction. We're about to get Matt's fourth quarter, but I do want to touch on something that I'm seeing is people that are doing. It's a little bit of a pandemic in the mortgage world. You need to know that cash is not king when you're buying a house, right? So when you're giving an agent an earnest money deposit and you give them a cashier's check, let's just say you have $1,000 on hand, it's cash. That money we cannot use in the transaction.
Mm-hmm.
Anything to do with the mortgage must be traceable. It must be in your bank account. We have to verify it coming out of your bank account. So please know that cash is not king. If you're not sure, give us a call before you make any moves with your money.
Right.
All right. So we had Joe on the show last week. I'm always interested in what everyone has to say. He gave his fourth quarter predictions early 2022. The experts are out. What is your take? Do you think that we're going to see through January, February, this strong seller's market, or do you think we're going to start to see that little pull?
I think it's going to go through whiplash. So I think we've kind of whipped into a buyer's market right now to where it's perfect for first-time home buyers. We probably have that till about February. I think then we're going to get all the new buyers back into the market. So inventory is going to come up, but the buyers are going to outweigh it just like last summer. So then we're going to swap or whip back into a seller's market come April, May again. And then I think towards the end of Q2, beginning of Q3, we're going to see a rate adjustment, and that's going to completely turn it back down. So to a buyer's, or bring it back down to a buyer's market. But that quarter point on $400,000 is going to be more than a $350,000 house payment right now.
Right.
So if you're thinking about buying with the rates now, if you're thinking, I'll wait for another year, when the rates go up, your buying power goes down, and you're going to pay more money on your mortgage for less house.
Correct.
So buyers right now, it's the time. If you're thinking about selling, April, May, June, it's going to be super hot. But by August, September again, I think it's going to cool off again. So I think it's in, out, in, out. But it's going to be crazy. And I'm super excited to be in it. And it's like madness. I love it.
I love it. That actually was like pretty spot on. So
Yeah.
I can't disagree with anything that he just said. I mean, so the point that you're going to take away from that is the time is now. If it makes sense, do it. You see the house, you love it, buy it. Don't be stuck paying higher rates when you don't need to. So we appreciate you joining in. This has been Becky Alley from Capital Mortgage Funding. For Matt Bush, for Lisa Lawson. We will see you next Saturday.